Welcome all, and thank you for taking your time to attend the earnings call for 2025 full year result. I will like to highlight the main achievement 25. You see a record results across all KPIs, strong performance in EBITDA with 2.4 billion, which is itself a 500 million growth in terms of EBITDA over the 24 performance. A strong net income, 1.3 billion, of course, supported by the disposal of the YOC share, but still remain an outstanding net income result. And a cash generation with a 50% conversion vis-à-vis the EBITDA, 1.2 billion, again, record result in free cash flow generation. Dividend margin growth over 2024. To appreciate it, we'll wait for the next slide. And strong growth in EPS also with 18%, which is well above the range that we committed to achieving at the Capital Market Day, that was 15/70%. I will jump to the next one to display the significant acceleration in our performance. You see stability with slight growth in 22, 23, then a first step up, 1.9 billion EBITDA and 2.4 billion this year. This 500 million is a significant hike in EBITDA, mainly coming from perimeter change, the full recognition of Anchor Wire impact in 25, the new acquisition channel, and the strongest ever performance comes from transmission with 200 million growth in EBITDA. To be honest, there is another 80 million benefit in terms of organic growth in the 25 result that is hidden by the Forex that was 80 million, 75 million to be specific adverse in 25 versus 24. I will not comment on the guidance now, but you see that 2.7 already positioned as, I would say, slightly ahead of what is the target that we have to achieve by 2028, considering that we still have 2 years to go. Free cash flow, similar trend, significant acceleration. 1.2 billion is a very good conversion rate for the current EBITDA. 1.350 is again another step up. This definitely position us ahead of the target of 2028. Let me move to the important contributors to the growth of the company in the last 18 months. This is 18 months worth of effort in reshaping our portfolio, making it more suited to our goal of become a stronger solution provider. You see in 24, in electrification, Anchor Wire gave us the access to electrification space in the United States. And thanks to that access, now we have a unique asset and unique opportunity to leverage the expansion of the data center. We followed this with the digital solution expansion of portfolio with connectivity with Warren Brown in 24 in Asia Pac and channel in US and also outside the US. And lately we had these 2 important acquisitions, although small, the Xtera and the SESM. Xtera gives us access to the submarine telecom long distance connection, helping us complement the strength that we have in the submarine energy business with submarine telecom opportunities. SESM is again an important step up in verticalizing our capabilities and in sourcing one of the most critical phase of the execution of the project, the survey assessment and the route preparation, which will help us become more efficient on the one end, but also able to stand the possible risk that comes from the burial depth that always rely on customer survey and not on own survey. We also work on our portfolio in terms of disposing shares of YOC, which is not considered any longer a crucial asset for us. And we made a couple of actually 3 factor reduction in the automotive perimeter to help us avoid the dilution coming from the difficult time that automotive is living worldwide. Also standing a remarkable achievement in the on the sustainability journey. Our newly defined target is to move to sustainability linked revenues, so revenues that are associated to low carbon products, sustainable solution 44 is the target, is the achievement for 25. Our target for 28 that we declare the Capital Market Day is 55%. So more than 11, 12 billion revenues in 28, and who knows whether this will be 11 or 12 or more, depending on the perimeter change, will be solutions that can offer benefit to our customer in terms of sustainability. Significant hike in the recycled content from 16 to 21%, and we continue our consistent journey of reducing Scope 1, 2, and 3 to achieve and meet our commitment to be net zero by 2035. We are also particularly proud of this record 50% achievement in share of our employees that hold shares in the company, which is a sign of consistent and growing confidence in the future of our company. Yeah, let me start with the star of 25. And there are many KPIs, but I will draw your attention to the right-hand side of the page, 30% organic growth, which equates to almost 800 million revenues in 1 year in terms of capacity expansion and execution of the projects. Second, 582 million EBITDA, 220 million additional to 2024. The step increase is amazing. And third, the EBITDA margin, 18.3% full year 25, supported by a 21% in quarter four, explains and give confidence and actually show that we are going to beat the target that we set for 2028 that was set at 18-20%. We are already there in 25 with an exit speed that goes beyond the range that we set for 2028. Amazing also the growth of the backlog, 17 billion, with 2 billion more worth of projects that been awarded to us. They are not in the backlog because they are waiting for the notice to proceed that will come in the next few quarters. Power distribution, we continue with a sustained growth. In the quarter was pretty strong, 13%. In the full year, still very strong, 8%. Certainly supported by two large regions, US and North America and Europe. The EBITDA margin full year is slightly down on 2024 because the quarter four is slightly down on year-over-year on quarter four 24. Again, the same point that I mentioned last time. There is this Midwest spike in cost due to the tariffs, unfortunately, that we could not pass to customer in the overhead transmission space in US because this is a fixed price business. Now we are moving to we're trying to define different solutions, but until we have flushed out the whole backlog, which was set when the Midwest was lower than this, we will suffer some contraction in the overhead transmission line that has a repercussion on the total power grid space. Electrification is showing a sluggish INC growth overall, but with a promising growth in quarter four in North America with almost 6% year-over-year growth, which is supported by what we see already in quarter one 2026. So we suffer a lot in terms of organic growth in 25 in the space in North America because the whole market, with the exclusion of data center, so the residential and the non-residential market was 6% down on 2024. These are probably the number of the spend occurred in US in construction business. The expectation, the outlook for 26 is much more promising, and the start of the year, as well as the exit of the last months of 2025, are extremely promising. The EBITDA margin full year grew by 900 basis points over 24, and this is again the level and the value of the accretion due to the acquisition of Anchor Wire in our perimeter, full perimeter. Specialty is nothing that it was not foreseen, but it's still disappointing. We have full year 24 reported 110 million EBITDA and now 280. There is a 10 million forex headwind, of course, but besides this, there is a weaker demand in automotive, in elevator, US, and in oil and gas. So contraction on margin, this business has caused this, let me say, 20 million organic decline. The rest is the forex effect. The profitability full year remained pretty consistent with the past, and we we have finally disposed the asset that we want to dispose in automotive towards the beginning of this year, January and February. So we should not see any longer the dilution coming from automotive, and we hope to see the rebound of the business in the rest of the verticals that we play in the different regions. Digital solution speaks for itself. Is a significant growth, organic, 7% full year, supported by the rebound of the business in the United States, with stability in Europe and other countries. And then there is the perimeter change that inside the 268 million equates for more or less 100 million, is the channel. You see our creative channel is with a quarter impact, which brought the EBITDA margin 5 points higher than what was 24, and overall EBITDA margin at 17.3 for the full year. Core channel will continue. It will also, as we did in the optical business, US benefit from the rebound of the market. And now we can finally work on the integration and leverage the bundling of connectivity cables and leverage the synergies that we'll have to achieve thanks to the cross-selling opportunity. Let me hand over to Francesco for more insight into the financial details.
Thank you very much, Massimo, and good morning to everybody. I'll be quick. The profit and loss statement, as Massimo said, EBITDA closed at 2.4 billion, exactly in the midpoint of our guidance, with a great margin expansion at standard metal price, an expansion of 130 basis points up to 14.2%, driven inorganically by the full year inclusion, the full year effect of the accretive Anchor Wire acquisition in terms of margin, and also by the inclusion of channel acquisition since June 2025. Organically, mainly driven by the outstanding margin expansion of the transmission business on a full year base, around 400 basis points, 4 percentage points. Drawing your attention on the right part of this slide, you see the bridge of our 24 to 25 adjusted EBITDA, with a total growth of close to 500 million euro, 470 million euro, despite the adverse forex effect worth 75 million. Business by business, transmission was the strongest part of this growth, almost 230 million, driven by an almost 30% organic growth, and as I said, an excellent margin expansion. Power grid also performed well, 24 million growth, of course, cleaned of the forex effect, performing very well in power distribution and in high voltage AC across all the regions, with only an adverse effect in North America overhead line business. But despite this, performed a significant growth. Also, top line organically grew by around 8% on a full year base. Electrification grew by 176 million, of which I&C contributed more than 200 million, whereas specialties dropped, driven by weak oil and gas, elevator, and automotive. As Massimo mentioned, a very promising exit speed and start of the year in the I&C business in North America after the challenging first half, the first 2 quarters, with pretty tough market conditions. Digital solution up almost to 130 million. Obviously, here we benefit of the inclusion since June of the channel acquisition, but I like to stress that also organically, and mainly in the US, EBITDA grew significantly on a like-for-like base. The little adverse perimeter effect of YFC, we gradually exited in the second and third quarter, and as I said, the forex effect. The other outstanding achievement is obviously net income, close to 1.3 billion. Of course, this includes the gains from YFC, net of tax in the region of 345 million, but still taking out this effect, the growth from 2024 is really outstanding, and the by the way, the 3.31 euro share of EPS, growing 18% since last year that Massimo already mentioned, I want to be very clear, is totally cleaned of the YOFC gains effect. So it's a normalized growth of our earning per share. We can move to the cash flow generation, and one more outstanding achievement of this 2025, close to 1.2 billion free cash flow generation. This was also benefiting of some extraordinarily low level of paid taxes in U.S., benefiting of a couple of positive one-off effects. But as you see, we perform really well in terms of working capital changes, down by almost 200 million, mainly in the transmission business, and despite the adverse effect of the rising metal price that unfortunately may be there also for this year, 2026, impacting our cash flow. You see that we deleveraged down to 3.1 billion debt, with the acquisition, which is almost entirely the acquisition of Channel, including the earn-out of 1,069 million, which is almost fully covered by the issuance of the hybrid bond, close to 1 billion. And you see here, totally taken out from the free cash flow, the effect of the disposals proceedings, 675 million, out of which 565 are related to the YOFC disposal. That's it. Back to Massimo for the outlook.
Thank you, Francesco. The outlook is pretty straightforward, and it is actually very outstanding in terms of confidence and commitment of the company to make it happen. 2.7 million midpoint in the EBITDA guidance, which sets a 300 million EBITDA increase over the ending point of 25. But in reality, considering there is 80 million perimeter adverse impact there is 80 million Forex effect adverse. It is actually a 380 million EBITDA increase. If you neutralize the Forex, you see on the right-hand chart that the bridge is plain that there is a significant organic growth. On top of it, there is the perimeter effect. It is more or less 80 million. So by coincidence, is that size that needs to be in place to offset the Forex impact. I think it's very, I would say brave, but we are very confident achieving it. It's much better than what we've seen across the other peers. They're not necessarily in the cable space, but in general. And we are very, very committed to achieving it. The free cash flow even stronger. Again, 50% conversion rate, 1.3 billion, 1.350 billion. Well ahead of what we need to be, or where we need to be in 2026 to underpin the 2028 capital market target. So confident to achieving both and continue the journey with organic growth and the M&As. The sustainability linked revenues will move from 44% 25 to 48 midpoint. One important remark: in our EBITDA, there is not any possible benefit, coming from the tariff situation. We haven't seen it yet in the past months. As I told you, it will take a little bit for the importers to change behavior in the market and allow us to gain share. And we didn't want to build any speculative benefit coming from the tariff situation, which has changed in a certain extent, but not much at all. We will see upside, possibly, coming from tariff in the coming months or coming quarters. Having said so, I close saying that we confirm the stronger drive in transmission business also for 2026. The Channel integration is a successful integration, considering that after concluding the amount payment that we had paid this company with a multiple of less than 7, and the synergy will kick in 2026, adding additional accretion to the digital solution EBITDA margin. The outstanding cash generation 2025 will be supported and in 2026 with additional cash flow. The dividend will increase from 0.80 to 0.90. And of course, this is what we see organically, but you know that we keep working on the M&A When this will happen, we cannot tell you yet, but there will be something happening in the next short term, let me say this. Thank you for your attention. I'd like to move on to the Q&A session.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Once again, it's star 11 for any question and wait for your name to be announced. Thank you. We are now going to proceed with our first question. And the questions come from the line of Akash Gupta from JP Morgan. Please ask a question.
Yes, hi, good morning, and thanks for your time. I have two. The first one is on guidance. At the midpoint, you target roughly 300 million increase year-on-year in EBITDA. I guess 140 million of that could be coming from transmission to get to 1 billion by 2028. And I think you said 80 million is coming from perimeter. So maybe if you can talk about how shall we think about the remaining 80 million between the three segments, grid electrification and digital solution on an organic basis. And same on guidance, your free cash flow guidance imply 50% FCF conversion at the midpoint, which is higher than what we have seen historically. So any color on that? That's the first one.
Thank you, Rakesh. Yes, you're right. So let's call it 200 million net, but in reality, organically, in terms of the offset of the forex is 380 million. So 150, more or less, will come from transmission. Remaining is 80 million. And so this brings us to 230, let's say, and there is another 150 organically coming from the rest of the business. So there is some organic growth in digital solution because we will continue to leverage on the strong demand in the United States, which is driven certainly by broadband deployment, but even more by data center expansion. They are desperate for additional volume, additional supply in optical space, likewise in the energy space. And there will be strong growth in power distribution. So despite the blip in EBITDA margin as you see in Q4, which was totally anticipated, the market demand in the US for medium voltage and high voltage is extremely strong. We can't cope with this demand. If you had more capacity available, we would sell it. And luckily, in January 27, we will have the first wave of new medium voltage capacity coming on stream in the Anchor site. This will be a powerful combination, the service level of Anchor with the power of medium voltage cable for INC, industrial construction, power grid. So power grid will also grow. And electrification, as said, we exit Q4 with a strong rebound in INC North America. Not followed by Europe. Europe is pretty weak in INC currently, but North America rebounding Q4 is what also we noticed in Q1. I don't think there's nothing to do with the tariff. If anything, is due to the contraction that the market suffered in 2025 that finally is resulting in a surge in demand in 2026. So to cut the story short, there will be organic growth planned in our 2.7 billion coming from all businesses, of course, with much more visibility in transmission, but with strong market demand in INC North America, in digital solution North America, and in power grid Europe and United States. I defer to Francesco the answer on the 50% conversion.
Yeah, thank you, Massimo. Ciao, Akash. No, definitely, let me say, an ambitious, still totally realistic target on which we are very confident. Let me first of all remark that already 2025 is very close to the 50% conversion rate. This improvement in free cash flow at midpoint is around 180 million versus the 2025 actual. We come first of all from the additional EBITDA. So if you take the 300 million additional EBITDA net of tax, this contributes around 220, 230 million. And then we will certainly have higher cash taxes. I mentioned that 2025 was kind of supported by a particularly low level of cash taxes in US. This will come back in 2026. And this means that we are committed to further improve our working capital. As I said, in 2025, most of the improvement came still from transmission. This will be a little bit different in 2026, and we should think that in 2026 we have pretty significant room to recover and to gain efficiency in terms of working capital. And this will be a key in order to deliver the 1.35 billion free cash flow guidance.
And to give you a little bit of more nuance, there is no any reduction in capex that support the free cash flow generation. If anything, 26, we continue with a strong capex deployment across all businesses, because this time we continue with transmission, we continue with power grid. We need to add digital solution. We are at capacity in fiber and cables, and so we will maintain a level of 800 million capex also for 2026 to support the organic growth across all the three businesses that I mentioned.
Let me also add one point that I missed, that the debt with this kind of cash generation in 25 and expected for 26, our net debt will be in the region of 2.6, 2.65, including, by the way, the two already announced acquisitions, which are worth in effect increasing our debt by 210, 220 million. And this means that in year-end 2026, our leverage will be lower than 1, based on the midpoint of the guidance. And that's really a great situation to be in, and I would say a better situation than we expect.
Much more better than expected, yes.
Thank you.
We are now going to proceed with our next question. And the questions come from the line of Daniela Costa from Goldman Sachs. Please ask your question.
Hi, good morning. Thank you. I have 3 questions. I'll ask them one at a time. The first one, just wanted to ask on power grids and on these what you call the temporary metal headwinds. Should we maybe can you quantify how much the hit was? And then should we expect that they will no longer be there from 1Q onwards?
Thank you, Daniela. Yes, the effect is temporary because it's due to the Midwest spike and the overhead transmission, where the margin, where the price is fixed. Yeah, I can't tell you the number. It was for the full year, but basically impacted quarter 3 and more. And more quarter 4 was a $30+ million worth of costs or margin contraction. The hit is visible at the group level because, you know, the power grid North America accounts for, let's say, 2/3 of the total EBITDA margin of the group. It will be there also in quarter 1 because the Midwest keep increasing and we still have significant volume associated to backlog that we landed in quarter 1 and quarter 2, 25, when the Midwest was pretty low prior to the spike during that time. So we see it in quarter 1 and milder in quarter 2. Gradually we will come out because what we are quoting today, the project that we are landing today for execution in quarter 3, quarter 4 have a fantastic margin, as you can imagine. But until we have flushed out the order backlog, we will be in the same situation. That's why we call it temporary.
Got it. Thank you. And then just on, I think you very clearly don't have in your guidance the tariff benefits. We have already seen, I guess, on the market data in copper wire and cable imports into the U.S., like the November data was down massively on the imports. We don't see very strong growth in your U.S. electrification business yet in Q4. Can you explain, is it because it's a different mix, maybe, or more indexed to things which haven't been included in the codes which haven't been included in the tariff yet? Is it just timing with distribution? Sort of how should we think about that data versus what you are printing in the U.S.?
Yeah, to full answer, in the copper space, there are no tariff at all. The tariff are applied to metal and not to the derivative products. And this seems not to be the intention of the administration. So the market is still free as it was before. Everyone is bearing the extra cost of the copper, of the cathode premium and the copper COMEX, and the market is the same as before. So this is the space where we would never expect, where we didn't expect to have any potential gain from the tariff. On the contrary, in the aluminum mill wire, we still have this 232 tariff applied to the metal content of cable imported from importers. But for the time being, we haven't seen a real change in behavior. They basically is volume. The cost of the 50% in their margin, their price, the importers, the distributors importing cables from overseas. That was my point. I don't know how long they can continue with this margin contraction. They haven't increased significantly the price. Yes, it is true they have increased a little bit their price, but we still have a significant price gap, like 10-15% between our price in the US and their price coming in. And so maybe they will not be able to bear the current margin contraction for too long, which is what we hope. But as well, we didn't speculate on the possible advances coming from this tariff. We're seeing, to be honest, in the last 2 months, a different trend in the aluminum building wire space inside ANCO, whereby we've been able to raise prices and we didn't lose volume and we didn't lose share of wallet. So this is a first time sign of possible advantage, but again, give us 2, 3, 4 more months to see if this trend materializes as a strong trend.
Got it. Thank you. And then just on some of the recent M&A you did, it seems like you've been these 2 deals, bolt-ons on submarine telecom cable or submarine fiber cables, which is an area you weren't very present on in the past. Can you talk through about sort of the synergies you see on that area, the potential for growth there is out there, why, maybe give us a bit of context of sort of like how relevant this might become in the future in the group?
Thank you, Daniela. Interesting question. The space we were in submarine telecom was only the regional connection without repeaters. And the market is, made the market 100, only 10% of the market is confined into regional short distance connection. So without repeaters, we cannot play in the big market, so the long distance interconnectors. The market has grown a lot on the back of the expansion of data center and AI build up. So we will, with the repeaters provided by Xtera, be able to amplify the optical signal in our cables and be a player also in the longer haul connection. So we have access, thanks to this technology, to a market that was before forbidden to us. We have all the rest of the know-how, the cable we have, the installation capability we have. This was the piece that we needed to be considered a player in the market. And we will, so today we make not big number, we make 100 million revenues in this submarine space, telecom space, without repeaters. The additional Xtera will help us grow significantly this scale in the submarine telecom.
Got it. Thank you very much.
Thank you, Daniela.
We are now going to proceed with our next question, and it comes from the line of Vivek Midha from Citi. Please ask your question.
Thank you very much, everyone, and good morning. I have 3, and I'll go one at a time. Thanks very much. So the first question is just a follow-up on your comment around the aluminium cable business in the US, potential for upside there driven by tariffs. Some of the press reporting from the Financial Times had suggested the US government had been considering rolling back some of the metal derivative tariffs, given the difficulty of implementation. In your conversations with the administration, do you get any sense that the current situation could change? Thank you.
No, we have no sign of possible changes to the current discipline as far as the 232 tariff is concerned. The only change would be the reciprocal country tariff, as you said, due to the Supreme Court ruling. But this will have a minor impact to our competition and or to our situation in US. So I think we're still positive about the fact that being local with a strong asset in terms of capacity and also lead time. And bear in mind, I'm not saying this for the sake of saying it. Data center requires significant service with large scale capacity. If you could take share in the market of the others, is because we can respond, thanks to the spare capacity we have in McKinney, to this demanding data center requirement in terms of volume and service. So we are really not worried, and we don't care much about importers. First of all, the aluminum building wire is a small space in the total INC space in the United States. Secondly, the strength that we have, thanks to the acquisition, are unique, that no one inside the United States, any of the players in the United States can copy, nor anyone from outside.
Thank you very much. Very clear. My second question is around the very healthy demand in the US for fiber, particularly from data centers. Could you give us an indication of what you expect the potential growth in the US could be, and also just a view on where you stand versus your capacity? Are you capacity constrained in the US, given that you're investing in capacity right now? Thank you.
Yeah, the demand remains as strong as it was in 2025, so we continue with the same pace. And if anything, we see even more demand from data center, because now they're worried about the ability of customer or suppliers to supply energy cable and optical cables. And we're entering into some deals with those hyperscalers to provide security of supply and receive some down payment in return. Energy demand is stronger. In cable demand for energy cables is stronger. Cable demand for optical cable is even stronger. We are about to lock investment in fiber capacity and optical cable capacity, because we, as everybody else in the United States, are at capacity. If you wanted fiber in the US, you don't find it. If you wanted fiber outside the US, you don't find it either. Not only from US player, but also from Japan, from China, from anyone. So the market is extremely tight, and this is the best condition for us to leverage on the one hand, pricing power, and also technological leadership that we have in the optical space, which is well recognized by the hyperscalers.
Very clear. My final question is on the technology side, again, for data centers. Do you have any sort of more views or color on the potential implications for your business from the transition to 800 VDC architecture? Any sort of views around the impact on the length of cable required, the value of the cable, and so on? Thank you.
Yeah, it's a technology that we developed already, the 800 volt direct current solution. Yes, it is true. If they shifted from AC to DC, which is a kind of a brainer, because they will save a lot of losses that the current AC solution incur, there will be a reduction in volume. But at the same time, the growth of the data center is so large that even if specifically per megawatt we see a reduction, there will be more compensation coming from the additional demand. Anyway, we own this technology. We were one of the first to develop, so we'll be happy to see and to participate to this conversion, which will never be deployed at scale, by the way.
Okay, that's great. Thank you.
Thank you, Vivek.
We are now going to proceed with our next question. And the question comes from the line of Monica Bosio from Intesa Sanpaolo. Please ask your question.
Hey, good morning, everyone. I hope you can hear me. I have three questions. Ciao Massimo, ciao Francesca and Cristina.
Hi.
The first question is on the data center revenues. Massimo, you anticipated that the weight of the data center revenues will achieve 10%. But what is the time frame do you have in mind for this weight? And what kind of margins should we figure out for the data center? This is the first question, and then I will move to the other.
Yeah. So yes, we achieved already in 25 a level of 1 billion direct sales and 500 million in direct sales. We believe that at the current pace we will hit the 2 billion target in 2026, so 10% of the total revenue. Yeah, the margin is a bit of a complex situation. It is very high margin in digital solution with those sophisticated optical cables. It's also very high margin in medium voltage, so powerful cables to interconnect buildings and connect data center campus among them. It's of course lower margin in low voltage cable, but it's lower relative to medium voltage. In electrification with asset like ENCO, we supply low voltage cable to data center, and we make 15, 16, 17% of the margin. So it's a very accretive margin in one word.
Okay. And if I may ask, maybe I didn't get, within the INC USA business in the fourth quarter, can you outline the margins in North America? Because the exit speed was strong, but I didn't manage to extrapolate the margins?
I didn't mention the margin, I believe, but it was as strong as quarter three. Quarter three was particularly strong due to the spike of tariffs that played in our favor when the copper tariffs were removed. But given the strong demand in quarter four, and despite the normalization of the copper price due to the tariff removal, we still had, I mean, when I say high, it means in the high teen digit numbers.
Perfect. Thank you. And the very last is more qualitative. Let's say that the consensus is closer to the midpoint, even a little bit higher to the midpoint of the new guidance. What are the main assumptions behind the upper part of your guidance range that could move toward the upper part?
There are two strong variables that, in a way or the other, have an impact on our result. One is the forex. Should it strengthen, we will have, of course, many more chances to beat the midpoint and go beyond even the top of the range. And second, more organic growth, which we think is what we see in January and February. But I said before, I mean, 2 months doesn't tell us the whole story, so we have to wait a few months to see if there is a stronger growth continuing in the coming months. And as I said before, we didn't bank on any tariffs, so if tariff come in, we will be in a different scenario. If the tariff benefit, as someone imagine, and I think there are some of you imagine hundreds of millions of benefit from tariff, and I think this is a bit ambitious as a consideration. But if tariff were to impact the business in US, that would be significant upside beyond the current guidance.
Yes, correct. Very clear. Thank you. Thank you.
You're welcome, Monica.
We are now going to proceed with our next question. And the question comes from the line of Uma Samlin from Bank of America. Please ask your question.
Hi, good morning, everyone. Thank you very much for taking my question. My first one is a follow-up on your tariff comments earlier. I think if I heard correctly, you said that you haven't seen much of behavioral change from the imports, but you have started to raise prices without losing much market share there. So what's your strategy going forward in terms of the balance between the market share and pricing? And, you know, if you are raising prices without losing market share, then can we expect the margin tailwinds here?
We sit today on a very good margin in INC North America. This margin is split between different segments. The copper business is extremely high regardless of tariff. In the aluminum business, it was not that high in quarter four. As said before, we raised the prices and the market to follow, and we didn't lose market share. This all depends on the balance between price and market share depends on the market demand. The market demand, as said, rebounded. We foresee, talking to our customer and talking also to data center customer, a stronger outlook for 2026. So all the conditions are there for us to benefit from a continued strong growth with high margin across the board for all the INC segment of business.
That's super clear. Thank you very much. My second question is on M&A. I guess you are interested in doing a bit more deals in the next year or two. And what are the types of targets you're interested in, and what are the key markets you have in mind?
We have explored, and we are still assessing different geographies and different opportunity in 3 main regions. And they start from priority 1, US, priority 2, Europe, priority 3, Latam. Different size of business, different size of opportunity. In which businesses? I mean, we have electrification as of course, interesting space in US, but equally also power grid. In Europe will be also electrification and power grid, and Latam is pretty much the same. So the businesses that are involved in this M&A are the ones that I mentioned. Then priorities or no priorities, we have to find the right one and proceed with the negotiation on the rest. But these are the area where we focus on business-wise and geography-wise.
Thank you very much.
You're welcome.
We are now going to proceed with our next question. And the question comes from the line of Sean McLoughlin from HSBC. Please ask your question.
Good morning. Thank you for taking my questions. My first is on transmission. The margin trajectory continues to surprise. You're already over 18% in 2025. I mean, well, first of all, what is driving it? Is this just execution? Is this just better operational leverage on your increased capacity? What kind of further improvements can we expect in 26, and how far ahead could we be coming versus your 2028 targets? Thank you. That's the first question.
Thank you, Michel. You mentioned two key factors, certainly the operational leverage and the execution, which is an important driver margin increase. The third one is the projects margin that we have in our backlog is better than what we executed in 25 or 24 or 23. And so we will continue leveraging the three factors. And where we could be in 28, I mean, at a certain point, we will go up with a new capital market day, not because we organically want to change 28, but because hopefully there will be a perimeter change. At that point, we will unveil and reveal the expectation for this EBITDA margin in transmission business. But of course, as you said, if you achieved already the, let's say, 20-ish level of EBITDA margin in quarter four, 2025, the expectation that we go well beyond what we committed to at the capital market day. And by the way, there's another player here that in Europe mentioned a very ambitious margin in transmission by 2030. So we want to beat that player, just to give you a sense of the ambition.
Fantastic. Thank you. And if I can just continue on transmission, just if there's any sign of change from your transmission customers in terms of absorbing the 30% increase in copper prices over the last 3 months, thinking out over the next years, if there's been any change in terms of CapEx ambitions, project timelines as a result of that?
But I think the transmission or TSOs, transmission system operator, has to digest the wave of order and the significant surge in order intake orders that they sent to the market in 23. So we don't see a slowdown in itself. We see that for the next 5 years, we are flat out in terms of capacity, and we are flat out in terms of delivery of the backlog, and the level of market we see will remain around these 15 billion euros in the coming years. And of course, project cost has increased due to the copper, but also some projects are in aluminum. Don't get me wrong. I think the point is we are all focused on the execution, us and the transmission system operator, and that's why we don't anticipate to see another wave of a 30 billion market intake as the one we've seen in 2023. But if the market continue with this 15 billion per year, we will be able to read beyond 2028 with sustainability of the EBITDA margin, sustainability of EBITDA, and possibility to further expand the capacity to absorb this continued demand in transmission business. And you never know, one day.
Yeah.
So I was trying to cut across. One day we might have more transmission opportunity also in US. I appreciate that the wind offshore is off the table in US, but thanks to data center, transmission interconnectors are becoming the key priority to spread the electricity capacity across different network and allow data center expansion to continue.
Thank you. Just lastly on M&A, I saw a press quote earlier where you were quoting saying you're ready for large targets. I guess, higher free cash flows is driving this ambition. Just in terms of, is this a change maybe from previous communication you talked about, deferring large M&A out for the next couple of years? So should we infer that you're now a little bit more ambitious on larger targets sooner?
Yeah, good question. It's to be honest, for sure it's a change, but we have many factors making us open to this change, like the disposal of YC that's been a particularly successful operation. Second, the performance in EBITDA in 2024 in 25, sorry, and performance in free cash flow. So we are deleveraging faster than anticipated. And so, as you know, as we deleverage faster, we have more power, ammunition to address large M&As. That larger, as you said, as we always say, is something similar to Anchor Wise. Don't think of something that is like a CONSCOP acquisition. And so we are ready. We are ready. And also be aware that between starting the M&A and having the opportunity come on stream will take 6-8 months. But we are ready to go for that once.
Thank you.
No. Sorry, I said CONSCOP to say, not trying. CONSCOP is a large M&A that I analyzed 1 year ago, but it was too large. And so we will not go for 10 billion M&A, that's to clarify. But the 3-4 billion M&A is something that is within reach.
Brilliant, thank you.
We are now going to proceed with our next question. And the question comes from the line of Chris Leonard from UBS. Please ask your question.
Yeah, hi there. Two from me as well, please. And starting on the M&A point, could you I know you said Europe was maybe second in line in terms of geographies of priority for you. Could you maybe comment if you can see the opportunity for margins to improve and expand across the power grid and electrification business within Europe without M&A, or do you think M&A and the consolidation in the market that M&A could offer would be an important driver for you to improve that European margin? Thanks.
I think your comments are correct. Now, organically, we can do a lot in terms of increasing the EBITDA margin because the demand is so strong that we are working in expanding capacity. So there will be pricing power, more pricing power. There will be more efficiency, more operational leverage. Of course, the M&A remain the main catalyst for a significant step change in profitability. Because when you combine two companies, there are plenty of synergies, cost synergies and commercial synergies that will help the EBITDA margins enhance pretty fast.
Thank you. It's really helpful. And just the second one was a follow-up on the fiber market and optical cables in the US. Can you speak maybe about, I know you're investing more here, but could you speak about any kind of metric for what your capacity is today in the US and what you're seeing in terms of what the potential increase could be? And secondly, I think historically you said you're in the data center market, you're slightly different to Corning up here in the US. And I wonder, because now there's a lot of capacity booked out, is there scope for you to maybe win share to move inside the data center? I think previously you said you were more outside the data center on the fiber business, but yeah, that any color there would be helpful. Thanks.
Yeah, so we will not share much about our capacity and the increase, but definitely the market has grown by a factor of 30% between 25 and 24, and we would like to maintain our share of wallet. So you can derive what will be our capacity effort increase to meet and maintain the market share. Data center is not that we are not in the data center, we are not in the inside building. So we deploy a lot of optical cables to connect to the individual buildings of a campus. Among them, inside the building there's a lot of connectivity and less cables. In that space, there are basically two players, Corning and CommScope/Amphenol and AFL. We have the opportunity to grow in this space, but not in hyperscale data center, but in enterprise data center.
Excellent. Thank you.
We are now going to proceed with our next question. And the question comes from the line of Alessandro Tortora from Mediobanca. Please ask your question.
Yes, hi. Good morning to everybody. I have 3 questions, okay, for me. The first one, if you can come back a little bit to the, let's say, profitability expectation on the digital solution business, considering that in 2026 we will have the full consolidation of China, but also the synergies that you mentioned. Also because now you were expecting also some organic improvement into, let's say, the legacy business. The second question is related to your comment on the approach that discussion you're having with the US hyperscalers. So we also saw in the past, in the recent past, some deals signed by Benetta, with Corning. Is it something, considering your product portfolio, that you could do? In the sense, do you see, let's say, the same business possibility for you, so just signing some multi-year framework agreement? So this is, let's say, the second question. And the third question is on the perimeter effect. Can you just, let's say, tell me exactly, because if I understood well, Kelly, we will have now the 10-month consolidation of channel, then ACSM, now the Spanish one, also Xtera now should be there. So just understand the perimeter, how the contribution, let's say, between the acquisition you made. Thanks.
Okay. I take this, the first one on profitability of digital solution for 2026. Well, it's not only channel. Certainly, channel is a great accretion. By the way, channel obviously will impact on a full year base on 2026, adding 5 months to the 7 months of 2025. But we definitely expect a growth organically also, driven by the very strong US market that we are seeing, which is not only volume, we expect also pricing to improve. So we have a dual component of this profitability enhancement that we expect for digital solution. And of course, the synergy is also coming from the channel deal, which are definitely interesting in terms of cross-selling opportunities. Maybe this is more potential expansion of our top line than margin accretion on the synergy side.
Mm-hmm.
The second one on US hyperscaler. US hyperscaler, I think that certainly for the inside data center, we would need to strengthen our product range. The discussions that we are having is more for outside the data center, so driving basically all the fiber connections to transmit data to data center. But this is also the so-called long haul business. This is also a very strongly growing business. So not only inside, where definitely to improve our product range, we would need maybe also a perimeter change, but we are organically mainly focused on long haul growth, also talking directly with the hyperscaler.
Yeah, spot on, Alessandro. We are having discussion about frame agreements or capacity reservation fees or kind of the staff down payment to provide security supply to these hyperscalers customer. Not necessarily only in the optical space, as Corning did with by the way, it was Meta, not Microsoft, and but also the energy space.
Okay, thanks. And yes, sorry, and on the perimeter effect, just if you can help me, let's say, to reconcile now the contribution we expect this year.
So your question is about this split of the three components is okay. I don't know. The channel is pretty simple. You take the 100 million we mentioned for 25, 7 months, and you extrapolate it to full year. You would basically end up with, give you the answer, 60 million additionally be that coming from channel. And then there is a kind of 25 million coming from the combination of the two, ICSM and Xtera. But you also take into account another change of perimeter, adverse, which is the YOC disposal, which account for 10 million. And so you end up with a number that we mentioned, 80 million, 60 plus from channel, 25 from Xtera, ICSM, minus the YOC share.
Okay, thanks. Sorry, just because I forgot, let's say, one point to ask. Can you help me, let's say, to understand the level of pricing effect, we are going to see this year in, let's say, in the power grids, INC, due to the recent increase in copper prices? Because I see Southwire now mentioning basically every week rising prices. I recall that you are some kind of price setter in the field. So just understand if you're talking about a high single digit price component a top-line level for you in this division? Thanks.
I know, level of price is difficult to say because it depends on the cost. So we have a formula in the power grid that help us pass on power distribution and voltage that help us pass on entirely the cost effect to the price. So we given, but in terms of demand, we see strong power grid demand in North America as well as in Europe. And so the level of pricing will be pretty robust, not only due to the cost pass on, but also due to the demand. INC, as said, is still weak, the performance of Europe. We see stable in quarter 1, 26 over quarter 4, 25. But in INC, but in United States, the market is pretty buoyant. As said before, there is a combination of two factors: the rebound of the non-residential business in US, compounded by the strong demand data center, making the INC and medium voltage business for INC customer in US very strong.
Thanks also for the extra question, guys.
Thank you, Alessandro. Welcome.
Thank you. As a final reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Once again, it's star 11 to register a question. We are now going to proceed with our next question. The questions come from the line of Jean-François Granjon from ODDO BHF. Please ask your question.
Yes, thank you. Good morning. Just one question regarding the CapEx. Could you make an update on the CapEx spend expected for 2026? You have communicated on the accumulate CapEx until 2028 to 2.6 billion. So, what would be the range on the CapEx expected for 2026? If could you expect an average between 6 to 7 million euros or a different amount for the CapEx expected in 2026? Thank you.
Didn't catch exactly the question. Is it about 26 or the future? Sorry, John. Yeah. 26.
For 2026.
The 800 million. Sorry, John, if you can repeat the question. The number for 26 is 800 million, which is in a slight increase over 2025. 27 number would be pretty much the same. We will probably exceed a little bit, given the additional organic growth needs that we see in these 3 years. The capital market day overall cumulative numbers, because the demand in transmission is stronger than expected, in power grid equally, and in telecom is definitely, digital solution is definitely much stronger than anticipated in the original CapEx commitment for the capital market day. If that was the sense of your question, sorry.
Okay. Okay, thank you.
Thank you.
Thank you. We have no further questions at this time, so I'll now hand back to you for closing remarks.
So thank you for attending this call. It was a pleasure to share with you this exciting results in 2024, and more importantly, the outstanding commitment for the 2026 targets for our company, which we ensure we will honor and we commit to achieving, and possibly let's wait a few months to understand how the market will respond in the United States, especially, and for further update, we'll meet you in the end of quarter 1.